For nearly a month, Ethereum has been locked in a tight, almost motionless range between $2,800 and $3,000. The price seems to hover, as if suspended in time, with each attempt to break free quickly pulled back into this narrow band. It's a period marked by anticipation where every small move is scrutinized by traders and investors alike, searching for clues about what might come next. After falling from its $4,800 high, the second largest cryptocurrency has entered a rare phase of calm. This is a stark contrast to the dramatic volatility that defined its previous months, when price swings of hundreds of dollars were almost a daily occurrence. This stability is unusual for crypto, a market famous for wild swings. In a space where double-digit percentage moves can happen overnight, such a prolonged period of quiet is both unsettling and intriguing. Sellers can't push it below $2,800, and buyers can't break $3,000, creating a tense standoff. It's as if both sides are waiting for a signal, unwilling to make the first move, resulting in a market that feels frozen in place. Trading volume has dropped, and the market feels like it's holding its breath. Fewer trades mean less momentum, and the usual buzz of activity has quieted to a low hum. This kind of consolidation is like a spring being wound tighter and tighter. Each day that passes without a breakout adds more potential energy to the market, increasing the stakes for when the next big move finally arrives. The longer the price stays compressed, the more energy builds up for a breakout. It's a classic setup in technical analysis. Periods of low volatility often precede explosive moves, catching many off guard. Everyone's watching, waiting for the move, up or down, that will finally break the deadlock. Social media buzzes with speculation, and analysts debate whether Ethereum will surge higher or tumble lower once the tension snaps. As of December 27, 2025, Ethereum remains in this holding pattern. The date serves as a reminder that markets can remain irrationally calm for longer than most expect, testing the patience of even the most seasoned traders. The calm may seem boring, but it's often the prelude to explosive action in crypto. History shows that these quiet periods rarely last forever, and when the breakout comes, it can be swift and dramatic. The question isn't if a breakout will come, but when and in which direction. For now, Ethereum's quiet dance around $3,000 continues, with the world watching and waiting for the next big move. To truly grasp Ethereum's current position in the market, it's essential to understand the concept of a volatility squeeze, a phenomenon that often sets the stage for dramatic price action in the world of trading. Picture stretching a rubber band between your fingers. The more you pull, the greater the tension, and the more explosive the snap when it finally lets go. This is a perfect metaphor for what happens in financial markets during a volatility squeeze. After a significant price surge or drop, assets like Ethereum often settle into a phase where price movement becomes minimal and the market seems to quiet down. During this time, price swings shrink dramatically, trading volume dries up, and the overall atmosphere feels almost eerily calm, like the market is holding its breath. This period is like a temporary ceasefire between buyers and sellers, each side waiting for the other to make the first move. In the fast-paced world of crypto, these moments of quiet rarely last long. The tension keeps building, and everyone knows a breakout is coming. When you see a long squeeze, a period where prices coil tighter and tighter, it's almost always a signal that a major move is on the horizon. Right now, Ethereum's chart is displaying this classic coiling pattern, with prices consolidating into a narrow range. Technical traders pay close attention to these setups, using tools like Bollinger Bands to measure just how tight the range has become and to anticipate when the squeeze might break. When the squeeze finally releases, the price can surge or plunge with incredible speed, often catching unprepared traders off guard and triggering a cascade of trades in both directions. For Ethereum, the current period of calm is anything but ordinary. It's a deceptive stillness, masking the potential for a powerful move. This isn't a dead market. It's more like a tightly wound spring ready to snap with force. The longer the squeeze lasts, the more energy builds up, and the more dramatic the eventual breakout is likely to be. That's why traders are glued to their screens, scanning for any hint of movement, knowing that the first sign of action could set off a chain reaction. In markets, just like in nature, the storm always follows the quiet. Ethereum's next big move could be just around the corner. Ethereum's current battleground is defined by three key price levels that every trader and investor should keep on their radar. These levels act as crucial markers, shaping the market's direction and influencing the decisions of both bulls and bears. First, let's talk about the support zone, $2,800 to $2,270. This is the floor where buyers consistently step in, defending against further drops and providing a safety net for the price. When Ethereum approaches this area, it often attracts renewed buying interest as traders look for potential rebounds. If Ethereum falls below $2,800, it's a clear bearish signal. Expect more downside pressure and possibly a wave of panic selling. This breakdown could trigger stop losses and accelerate the decline, so it's a level closely watched by market participants. Next, the pivot point at $3,000. This psychological barrier has repeatedly stopped rallies in their tracks, acting as a ceiling that's tough to break. It's not just a round number, it's a battleground where buyers and sellers fiercely compete for control. It's the main line in the sand, a sustained move above $3,000 signals that buyers are gaining the upper hand. If Ethereum can hold above this level, it often sparks renewed optimism and can trigger a wave of buying momentum. Above that, resistance sits at $3,245. This is where previous rallies have failed, and sellers have stepped in to halt further gains. It's a tough barrier, representing the last major hurdle before Ethereum can attempt a bigger breakout. Breaking $3,345 would be a strong bullish sign, opening the door to higher levels and potentially starting a new uptrend. Traders watch this level for confirmation of a major shift in market sentiment. These three levels, support, pivot, and resistance, define the current trading landscape for Ethereum. They serve as guideposts for traders navigating the market's volatility. Price action around these zones gives important clues about the next move. Watching how Ethereum reacts at each level can help traders anticipate breakouts or breakdowns. For now, Ethereum is trapped between these boundaries, coiling tighter as energy builds. The longer it stays in this range, the more explosive the eventual move could be. A break below support warns of more losses and a possible trend reversal. A break above resistance signals a new uptrend and could attract fresh capital into the market. The market is waiting for a winner to emerge, and whichever side claims victory at these key levels will set the tone for Ethereum's next big move. Ethereum's stability around $3,000 isn't random, it's driven by the options market. A massive year-end expiry on Deribit is about to settle $3.8 billion in ETH contracts. The max pain price, where most options expire worthless, sits right at $3,000. This creates a magnetic pull, as big players try to keep the price pinned until expiry. Once the contracts settle, that pressure vanishes. With the options market's grip gone, Ethereum will be free to move. Many analysts expect real price action to begin after this event. The expiry is the final hurdle before volatility returns. On-chain data offers a window into investor behavior. Looking at the Arbitrum network, we see muted, choppy ETH flows, no big moves in or out. This means smart money is waiting, not betting big in either direction. Their indecision mirrors the tight price range. If we see a sudden spike in ETH inflows, it could signal accumulation before a breakout. A big outflow might warn of a coming drop. For now, the data shows equilibrium, no panic, no rush. This patience from large players is quietly bullish. They see current prices as fair value, not a reason to sell. The market is waiting for a clear signal. Comparing Ethereum to Solana highlights why ETH is so stable right now. Ethereum prioritizes security and decentralization, building slowly but with strong foundations. This attracts long-term investors and institutions who value reliability. Even after price drops, Ethereum finds support and consolidates, not panics. Solana, by contrast, is built for speed and low costs, leading to more volatility and sharper swings. Its trends are explosive, but its consolidations are brief. Ethereum's slow, steady approach creates a solid price floor. It's not about which is better, but why Ethereum's calm is a feature, not a flaw. This stability builds investor confidence for the next big move. When the breakout comes, it's built on a stronger base. Ethereum's careful development attracts institutional capital, big funds and corporations seeking stability. These investors want predictability, not wild swings. Ethereum's governance is transparent and slow-moving, reducing risk. This reassures regulators and big players alike. When prices dip, institutions see opportunity, not crisis. Their steady demand creates a strong price floor. Ethereum has become a blue-chip asset in crypto, like Microsoft in stocks. This trust from big money makes the current consolidation a healthy pause, not a warning sign. Bitcoin's moves set the tone for the entire crypto market, including Ethereum. Right now, Bitcoin is also consolidating, with its own massive options expiry looming. Its max pain point is at $95,000, keeping volatility low. If Bitcoin absorbs its expiry smoothly, it's a green light for Ethereum to rally. A strong Bitcoin gives traders confidence to take risks elsewhere, but if Bitcoin breaks down, Ethereum will struggle to rally alone. For now, both are coiling, waiting for a catalyst. Bitcoin's next move will likely trigger Ethereum's breakout. All signs point to Ethereum's current range as a phase of accumulation, not distribution. Strong support at $2,800 and no panic selling suggest buyers are quietly building positions. The volatility squeeze is reaching its breaking point. The year-end options expiry is the likely catalyst for a move. With more call options than puts, sentiment leans bullish. But if $2,800 fails, the bullish case is off. Most data favors an upside breakout once the pressure is released. The calm is nearly over. Ethereum's next big move is coming soon.